Hello, trading has closed on February 2nd, 2023. We always start with our disclaimer, go over our calls, and then make some predictions. This is my trading plan for Friday, February 3rd, 2023. Please remember, I can be wrong, and any trade you make should be at your own risk. Today we look for the pattern with the early low, which is what this is, and tomorrow should have the early high. We didn't make a specific call. I said I wanted to see if we got follow through from yesterday's rally, which we did, and that means higher prices are coming, but that doesn't mean they have to come tomorrow. We did get to cross an old target off the list from last August, 41.5788. Here's resistance right at the target, broke through, stopped right at this green line, which is a former FOMC announcement price. Well, that's the third target we get to cross off the list. These were the unfilled targets from last year. We had 10. I said I thought all, or at least most of them, would print before the year's out, even though people were negative on the market a month ago. We've printed 3 of the 10. I'm pretty confident we're going to see these 6. I'm less confident about this 37.75. That doesn't mean any of these things have to print tomorrow. During the day, MEJT said this rally was a false move. The market was rallying all day, said it wouldn't stick. Prices retraced. We had this big drop. MEJT said prices would return to this area, which they did. There's an optional target from the morning that we'll see 44.73. It doesn't have to print, but it will do so the vast majority of the time. Futures are down smartly as I'm recording this. There's usually support under the target, but it only works the first time you hit it. We've already threatened that price here, so if we do get this target, we don't have to expect support under it. It's already been used up. This is a daily chart. If you look closely, you'll see a golden cross of the 250-day moving averages. Now I have some other charting services which don't show that, and I can't say who's right. But still, the golden cross like that's a sign that the bear market's over. We also have bar 13 of a DeMark combo sell signal. These things aren't as good at predicting tops as they are predicting bottoms, but there's the signal. According to his work, it means we're overextended, and the fact that we're way over this upper Bollinger Band goes along with the overextended condition of the market. Now, you don't have to collapse when these things happen. You can work out the overextended condition in terms of time rather than price. You can also get even more overextended than this, but this is a level at which rallies tend to run into at least some small resistance, at least over the very short term. I shouldn't have said small resistance. Well, here's the weekly chart. Here's an old TDST line, that's resistance. Here's the upper Bollinger Band, that's resistance. Here's the 89-week moving average, that's resistance. I think we'll break through this at some point, but right now you're at resistance. If you gap over resistance, you can keep going higher. If not, I would be aware of resistance in this area. Well, here's our count, and the question is, was this the end of wave 2 And are we in wave 3? Or are we making an expanded flat? Now this rally here is right at the 61.8% retrace of wave gray C. It's one of the logical places for rallies to run into resistance again. You're also rallying over a declining 200-day moving average. That usually doesn't last very long. And I just can't count this as a 5-wave structure. Doesn't make me right. Let's see how we can count this. Well, here was your leg down. We're calling that A. We're calling this B. It's 127.2%. The length of A. The inverse of that, 78.6. It's a common place for these things to end. You get fib resistance there. If you look at this count, you can count this as A and a B. Wave C has an A, B, C with C equal to A. And wave red C's exactly 2.618 times A. So if we do stop here, you certainly have the Fibonacci support for this being at least a short-term high. Of course, if you go much past this, the whole idea is killed. At this point, you don't know. If that's the right count, and if wave C is equal to A, it'll take us down around 38.50. And doesn't mean it has to stop there, but there's no reason it wouldn't if that's the right count. I still have a lot of unsatisfied MEJT targets, and I'd rather see them print prior to us going up. Now you could argue this is a wave 3 already. Where's the 5-wave structure? I mean, these things all count as 3s. I don't see a 5. I don't think we're in wave 3 yet, and I'm still waiting for this wave C of 2. Tomorrow's pattern has the early high. We could nonetheless gap down. Typically it's a bearish day with a final hour low. Futures are down sharply as I write this, and if early weakness is maintained through tomorrow's open, it should be hard to overcome this bearish tendency. Longer term, the confirmation of yesterday's rally gives further evidence the bear market's over. But over the very short term, we have a Dow theory non-confirmation as the trannies were up and industrials were down. We have a VIX Bollinger Band reversal sell signal as it went through its Bollinger Band and reversed. We have a DeMark daily combo sell signal. We gapped up at a higher high, closed under midday highs. We have a timing sell based on someone else's work, and we have a wave count compatible with a high. In addition, I can't count the current rally as a 5-wave structure, and I think we're still in wave 2. And none of that is bullish stuff, and today's high is a good chance of holding. Bearish calls here should be considered counter-trend, but I'm looking for lower prices tomorrow and not necessarily stopping tomorrow, with the possibility of a sizable leg down in the market, which nonetheless is heading much higher later in the year. So this is a good candidate for the end of this rally. We have a possibility of a 340 handle drop if wave C of 2 is equal to A of 2. If that were to happen, it might not go all the way because you might not go under the 200-day moving average, which is around 39.51, but that's still over 200 points down from where we closed. So if we do get a wave C, then I look for a huge rally, most likely to new all-time highs before the year's out. But as far as right now is concerned, we're stopping at strong resistance. We can always gap over it, go higher, but I think the odds our high that we completed, wave B of 2 today, that we have the wave C to go before the market takes off and makes a strong rally before the year's out. So tomorrow has the early high. I'm looking for lower prices. Remember, gapping up smartly kills the call. The drop could be steep over the next few days or weeks, but after that, huge rally. And that's today's call.